Our mission at the National Pork Board is to diversify our market options, to add value to the products that we're exporting abroad through trade promotion funding and investment, and to differentiate U.S. pork versus domestic options in foreign markets and other import options or competitive countries. We have a great story to tell with a consistent, safe product and a quality product, and as well as lifting up all the great initiatives that our producers do on a daily basis, whether it's sustainability, biosecurity, or participation in PQA+. That goes a long way to telling our story about how we produce a great product. Our approach is to provide insights and expertise to our exporters and to facilitate the relationships between exporters and importers as we build the brand for U.S. pork. We do so with a number of partners, including the U.S. Department of Agriculture with their market access program and their expertise, the National Pork Producers Council, who works on market access to obtain our ability to sell into different markets, and the U.S. Meat Export Federation, who has been our strategic partner for many years, having presence in all of our key markets. Yep, go ahead, sir. So with that, we also have a number of other consultants, and one of them is Gira. They will tell you about their business and about themselves, but they have been instrumental and have a different viewpoint, being based as a European consultancy firm, on what's going on in this dynamic world of ours and how that impacts our ability to create value for our exports and to help us prioritize. So with that, Rupert Claxton.
Hi, Courtney, thank you for the introduction. Really nice to be here at what is arguably a difficult time in the industry. And that's sort of been the story running for the last couple of years. Every time I go, we're going to get better, we move into more difficulty. And we've been through ASF in Asia, COVID. Now we've had the feed price crisis, the Ukraine, and now we're looking at the cost of pigs and the ongoing sustainability and animal welfare discussion. There we go. So I've got about 45 minutes, and we'll take some questions at the end to give you a little bit of our view of the world. Gira's been working in meat and livestock globally, although we're based in France. I'm based in the UK. The company was founded in 1970. We work independently. We're not aligned with the government. We're not aligned with the US or France or Germany or anywhere else in the world, but we work with everybody around the world, and that gives us a very privileged view of what's going on. For me, that means I work on the meat and livestock sector. I'm the director of that. I've worked with Gira for 20 years. And I spend most of my life 40,000 feet above the industry, watching all the pieces move and interlink. And every now and then, we're down doing consultancy at the sort of the grassroots level. What that allows us to do is take our head out of the box that most people have to spend their time in business and think about how it all fits together. So what we do for Pork Board is to share some of that view, put it together. I've got a team that work with me around the world, with 30 in the core of the company, another 30 around that help us with specific challenges. Rich Hertzfelder, who's here with me today, has looked after China for us. He lived in China for 25 years, moved back to the US, so we've got a native speaker for everyone. It'll be okay. Just before COVID struck, lives in New Jersey. He'll give you some of the view of where we are in China. We want to spend some time on that. So what I want to do today is go, look, here's the big global picture. All meats, very quickly. We don't want to get lost in that. Then talk a little bit about where the global pork picture is. Just position the US. Because I know when you sit here and you look at what you're doing day to day, it's hard to imagine what the scale of the whole thing looks like. And then to talk a little bit about Europe and a little bit about China. Because I think we've got two things going on there that are really relevant to what you're seeing here today. A little bit about what might come down the line with Prop 12 and all the discussion around that. And the challenges in the export markets, which is fundamentally what we do with the National Pork Board, is to help them have a view of what the opportunity is around the world, and then for them to target what they want to do with the dollars to make that work going forward. So for me, that means I spend my time thinking about the things that impact the industry, both short term, today and tomorrow, and out into the mid and long term, 5 and 10 years. We try not to go beyond 10 years. We did a project for Pork Board going out 20 years. But it's very hard to plan what's going to happen in the industry 20 years ahead. These are the things on the screen that bother me currently. And they're sort of the top of the list ones. There's a whole range of things that come in underneath that. The little red ball in the top corner there is COVID. It's faded, it's not gone away. We are still living with the repercussions. Some of what you see today in the price impact in the US and what we lived through last year in Europe is because of the rebound in consumer spending and post-COVID adjustments that we've seen from that. And that adjustment takes time to come through. ASF, the big green thing there, break it into two parts. There's a European style problem, which is where the pigs on farm, yeah, we get it on farm occasionally, but that's not the problem. That's not where we're losing production. Most of the European problem is about wild boar. I'll show you a map a bit later on. What it means is that producers aren't investing because they're losing export access. The Germans especially lost access to the four big Asian export markets of China, Japan, Korea, and the Philippines because regionalization wasn't accepted. Today, they have access back to Korea, but they're not moving much product. The challenge of that is people aren't reinvesting. We can't return value to the farmer if we can't valorize the byproducts on those Asian markets. So we see a production shrink. The Asian problem is much more direct. Pigs die on farm and the production and the food source isn't there. And so we saw huge crashes in Chinese production. That followed on in Vietnam, the Philippines, and Thailand today is coping with it. Somewhere between 30 and 40% is the typical decline in production we saw in Asia. In Europe, it's nothing like that. So different types of problem, but you have to think about it. The next thing across the graph there is inflation. We have seen inflation globally. Everyone is struggling with it. Fuel prices are up, food prices are up. It eats into their disposable income, and we know that meat consumption is really tightly linked to disposable income, especially in the lower income demographics. So if the fuel cost goes up, the electricity cost goes up, people buy less meat. They downtrade. Beef, steak to mince, mince down to chicken. We see them coming out of the higher quality cuts. And that happens at a global level. So we have to think about what the total basket looks like. Energy cost, this blue square out here on the side, particularly in Europe, where we're talking about processors and consumers seeing a 5 to 7-fold increase in their energy prices. That bites into that disposable income. But also, if you're running a processing plant and your energy cost goes up 5 to 7-fold in the space of a couple of months, how do you factor that in? How do you plan? How does that look? It's also hit things like the fertilizer price in Europe. Friends at home saw their fertilizer bill, and okay, I'm going to put it in European units, and you'll have to work that out later. But a bag of fertilizer, a ton bag, 1,000 kilos, went from about £270 sterling to £900 sterling in the space of 2 months, even if you could get it. So that changes the outlook on feed availability. Thankfully, the feed price one there in the middle is coming back down. So feed is becoming much more affordable, but we've still got to pass some costs on. Transportation costs are still an issue. The chicken. Why have I put a chicken in a pork presentation? HPAI, high-path avian influenza. We've got a strain that we haven't seen before, or at least a variation of that strain, that gets into barns much more easily. We've seen more disruption of breeding flocks in the US and in Europe, which means although the industry can grow, it can't grow at perhaps the rate it would otherwise. So there isn't as much chicken as there could be on the world market. It's right on the border of Brazil. If it gets into the Brazilian commercial flock, will the world put a ban on Brazil shipping chicken? 50% of the chicken in Japan comes from Brazil. What does that mean for their meat supply and demand around the world? So we're thinking about these things. China, all the time China. 20% of the world's population, the second biggest population in the world now, overtaken by India last month. But hugely important for what goes on in the meat industry and for the pork industry especially. We've seen that. And then just sidelined off at the edge here, because last year they faded out of everyone's attention span a little bit. The sustainability criteria, they're back this year. The companies are pushing on them, the animal rights organizations are pushing on them, the governments are thinking about targets. COP27 finally recognized that you've got to put something in if you're going to get meat out and feed the world. So there is a growing awareness of that, but it's not where it needs to be yet. We need to work on that with the politicians and with the industry. We need to be part of the conversation as a meat industry. Prop 12, you're all painfully aware of that. I won't labour that one. I think that's been discussed quite a lot over the last couple of days and weeks. But the Europeans are dealing with similar animal welfare legislation problems. Now, they're not exactly the same, but there are lessons. Talk to each other. As an industry, talk to the people that are putting these laws and regulations in the future. If we're not part of the discussion, we're going to get told what to do by people who don't understand it. We have to get involved. And it's no good just to go, we've always done it like this, it's okay. Think about what the consumers are going to buy, and then we've got to think about how to charge for it. Meat-free. It's come off the radar a little bit, this meat-free discussion. A lot of the meat alternative products that are in the market today have been seen. They're not new. They're not particularly catching the headlines as they were over the last 2 or 3 years. The thing that's coming is cell-based. It is under development. They will get that across the line probably 5 to 10 years before it's really competitive. We just need to keep an eye on it and think about what is it, how do we position ourselves? How do we tell the story of meat? How do we keep that story running? So there are things for me that sit top of mind. In terms of where is total meat consumption, this chart, so we put everything back into CWE, carcass weight equivalent, so tons carcass weight equivalent rather than product weight. So the numbers look a little different, perhaps, to what you're used to seeing. But it allows us to get back eventually to the number of animals we need to get that meat number from. So you can see the yellow line at the top there is poultry meat production. That shows that the biggest meat in the world is effectively chicken, but there's also turkey, geese, duck in there. It overtook pork. The reason it took so long to overtake pork, because it should have been there in the US, it was already there, was because of China and the growth we saw in China. China slowed down in 2014. Pork growth slows down. The big dip is ASF in Asia. That's what that crash in the pink line is. And then you see the position of beef and sheep meat at the bottom, or sheep and goat. We're still positive about the outlook at a global level. We are going to see more meat production. There is more demand for meat around the world. This is the good news part of the story. So we know we are seeing demand around the world continue to increase. It's not in the developed markets. Most of it comes from Asia and Africa. And we've got to work out how we serve and become part of that story. In terms of per capita consumption, this is what fuels the thing behind this. If you look at the very top of that chart, we've got US per capita consumption. The market is still projecting that the US is going to eat more meat, even though it's the highest in the world already. That's a challenge. We're going to have to work very hard to get your consumers to buy more. Below that, you can see that we get stagnation. So you've got Argentina at a huge level, but they're eating a lot of beef, and that beef has got more expensive. They're shifting to chicken, but also we've seen a decline. Economics rather than population drive that down. Brazil, stagnating for similar reasons. Economics are not going to give them the ability to eat more. There is potential there. Russia, because of the economic crisis created by the Ukraine war, will eat a bit more, but not as much as it was before. The growth rates before that were good. The black line is Europe, and you see that Europe stagnates. The reality is the Western European countries are going to eat less over the next 5 years, but Eastern Europe, the demand continues to grow. It's for chicken, because it's the most affordable thing. It's the countries down at the bottom. That black dotted line represents the global average. It's this lot below that where we see the opportunity to grow. We've got challenges of getting pork in there, challenges distributing fresh meat. But we know in the lower income groups around the world, we've got population growth and we've got economic growth that drives per capita meat consumption. So that, for me, is why at a global level we become more positive. So if we bring that away from total meat and think about what it means for pork, and there's probably too much detail for a whole session on this slide, so don't worry too much. The key is that the bounce in China has driven most of the positive figures that we see at a global level. So we're looking from 21 into 22, which is the second bar of each series of 4. 22 into 23 was a much more complicated year to look at because we saw China slow down. We saw that Europe was dealing with a massive sow cull last year, and the US still had more product coming into the market. So if you look at the production, we're still quite positive in 23, but we're much less positive when we start to talk about price. And so you see the price bars here were down last year because of the European one. They're up because of the European one being up and because we see China has sort of hit a bottom. But in the US, that's not the case. You're the other way around, which is the offset. That's the thing we have to worry about. And so when I look at 2023 and think about how we've got here, we're a year out of step with Europe, which is unusual. We don't normally see the US and Europe get so far out of step with each other. And that's the bit we want to talk about. In terms of total global production, in Portland, there's a bit more detail. That long-term growth, 2% per annum, really driven by the Asian markets. The US has continued to grow. Europe's been very soft through that period. Then we go through the point of 2014 when China slows down. And China was actually in decline after that. Rich will talk about that in a minute. And then you see ASF, that huge decline in global production. There was not enough pork in the world to backfill the gap in China. But thankfully for us, when COVID struck, China was desperately short, and everybody was able to move not just pork, but meat out of their developed markets into China that needed it, and it helped save the price around the world at what would have been an awkward time. China bounces, the outlook is much more positive, and we see that we're talking about more meat in China, but as Rich will show you, the Chinese market peaks. What is the outlook? Where are we going to see that growth coming in the next 5 years? This is the price offset I want to talk about. The first thing is to show you with China in it. So the red line at the top is the Chinese pork producer price. We've translated everything back into US dollars per ton carcass weight equivalent. There's a little bit of fiddling around with coefficients to get something we can compare, because true to fashion, everyone wants to give their price in a slightly different way. What we're really interested in is this end of the graph. So this goes back to 2019, and this big uptick that you see in the price is what happens as China runs short of pork with ASF. And this huge decline off the back end was when everyone was complaining about the import price into China coming back. The reality is it's still okay. Chinese price over that period is up, but they've got a much more expensive production system than they had. And Rich, again, will talk about that. If I take China out and we just zoom in, what we become more interested in is this differential between the US in the blue and Europe in grey. And so last year, you can see as we went through 2022, the European price, although it had come up, didn't come up enough to reflect the huge increase in the cost of feed and energy and labour. And so the Europeans were losing money. If we look at the difference in the US at the time, prices were up, you were making money. Switch over this year, Europeans have culled sales out. We haven't got the production on the ground. The European price is up. And so that's what this grey line represents. And we're making money, whereas at the US end of the spectrum, you know the story here today, it's complete reverse. So are we expecting the US to go through the same system? Brazil, still profitable, doing its own thing at the bottom there. Some of the most cost-competitive product on the world market, but it really struggles in terms of consistency and quality of meat when we see them at export. But they're focused really on their domestic market. In terms of who's trading it around the world, this just shows, and I'm going to show you the export one in flip in a minute, but I don't want to go on for too long. Pork importers. The key of this is that this yellow, this shows total pork imports going back to 2020. And you see that that was the Chinese peak they were buying, nearly 5.5 million tons a year of muscle cuts. I'm not putting offal into that chart. And you see the decline as we come away from that. Forecast coming to this year is a little bit of an increase on last year, but only 2.5 million tons. That's still a really good year into China if we went back to, say, 2017, 18. But compared to the big spike up, it's not as good. What I'm interested in showing you here is just where China's been buying from. And so you see this decline. So now these 6 tiles show you the major import markets and where they buy their meat from over the same period. And so the one we want to pick out really is China here. See that huge decline in China, and you see how much the Europeans have lost in volume over that period, US as well. Brazil maintains its volume into China. Politically, they've done a lot of work of being best friends with the Chinese, but they're also strongly cost competitive. Japan, really one of the important markets around the world, very high priced, pretty stable. And we saw last year a little bit of offset between Europe and the US. Very cheap European pork, very expensive US pork by comparison. The Europeans took market share off the US. Come into this year, we've reversed the roles. The Europeans are tight for supply, price is high. They're losing market share, and you are picking it back up off the Europeans. So that's what we'd expect to see. See in Korea, sorry, these scales aren't the same. 6 million tons for China, 2 million tons there for Japan, only 800,000 tons for Korea. But it's still an important market with growth potential, and they have an ASF problem. So we're seeing ASF in Korea spread, more import opportunity. And you see the Europeans have been very strong into there. I suspect with the prices we see this year in Europe, we're going to have more opportunity for US pork going in there. Russia, just to make the point, it does still import product, mostly from its neighbours. Everyone else is effectively shut out. But it happened long before the current situation. In terms of the exporters, this just gives you a little bit of very quick perspective of where you sit. The US, there we're forecasting at about 2.6 last year, 2.8, sorry, last year, going up to nearly 3 million tons this year. Again, cost competitiveness and availability driving that. The Europeans, big exporters, but they've also got the UK market in there that counts now as an extra trade for the Europeans. We never used to count it in there because it was part of, we count the EU as one block in terms of trade, so we don't count cross-border trade in there. But they're very good at getting low-quality product out in places across Asia, Africa, and you see them competing in a number of markets. The word of warning here is that the Europeans, as they get pushed out of China, like everybody else, is coming to look for other markets that it can go to. And so we find them trying to compete with US pork in a number of markets that we would have considered to be strongholds of US supply. And so that means that the US has to continue to do a better game. And that's one of the things we work with the pork board on around the world is how do you compete with that. GB, just to give you an idea of how big the UK import market is, back from 300,000 tonnes in 2020. There's a little bit of adjustment going on as we work through the post-Brexit decision-making process. It's probably being kind to the people. I think it just happened. Heavily reliant on the Europeans. We buy a bit in from Asia. Real conversation about where, sorry, that's where the UK exports to. Or I put the other one in. No, I didn't put the UK import market in there. The UK import chart's really interesting, but we'll come to that another time. But very heavily based on what we can buy from Europe at the moment. So, bring it just back in to talk briefly about what's going on in Europe. And I think for you in the room, it's interesting to understand what the Europeans have gone through. We have a much bigger, higher population density than you see in the US. It's very hard to get away from people. I know you think it's hard to build a pig barn here. If you go to Germany and try and build a pig barn, you want to put a new sow barn in, that's fine. You can knock down the one you've got, and you can build it on exactly the same footprint. But we're not going to let you have another one because we're not convinced about nitrogen regulation, the manure disposal schemes. That's the same across Europe. The tightening up of that red tape again about expanding and changing. And actually, it's shrinking. So we're seeing the Dutch being told that we're going to start buying farms out again because we need to have less production. The Danes are down. I think year to date, Danish pork production is down 18%. So that shrinking of European production is a real story. So this just breaks out into two graphs. Don't worry too much about the text. What I wanted to show you is the long-term trend. So this is annual production. The black line at the top of that is production in Europe. And what you see is there's a little bit of European expansion which drives some of this lift up as we added countries into Europe. But going back to 2011, you see it goes up to a peak around 2016. People were building up because there was an opportunity in China. I'll show you what happens with Spain in a minute. They grew, but they're at about a peak. And then the market begins to fall away. And so we see this decline in European production. The long-term projection is that continues. Although we came down sharply last year, and there might be a little bit of rebuilding of the sow herd, it won't recover what we've lost. So long-term, Europe will have less product to export with. They'll have enough for their domestic market, but there's just going to be a little bit of rebalancing of who's got what. In terms of export, you can see that export growth into China, not just the sharp bit with ASF, but the run-up in the years before, has helped pull some of that production through. In terms of consumption, the consumption picture is pretty negative. We see it continue to fall. Okay, it's falling at a slower rate than production, but it's still in decline. Consumers eat more chicken. They also eat less meat. Profitability, though, in Europe, that's worth just pulling out and thinking about. Last year was a bloodbath. I was sat with the UK producers 3 weeks ago, and some of them were telling me last year they were giving pigs to slaughterhouses, literally for free. Didn't have them on contract, couldn't get rid of them, would have had to pay to have them destroyed. It was cheaper to give them away for nothing. Now, there's a government investigation as to how that happened and should it have been allowed to. The reality is a lot of money was lost, and now they're being asked to invest in more sustainability, more environmental measures, and they're saying, we just don't have the money to do that. They'll have to do it. The market is going to drive it. The result, right across Europe, was similar, that we've lost sows from production. We've lost buildings that were sow buildings. Farmers are getting to retirement. The next generation are looking at that going, I don't think I want any part of that. I'm going to go to town and do something different. And so we see a permanent decline in production, and it's very difficult to scale up agriculture in Europe. People do not want big agri-complexes anywhere near them. So we have a real pressure issue in expanding. The result, though, of being short of production is it is profitable in Europe today. Now, these are our forecast projecting ahead. So the hatching is this year. Depends a little bit on where you are in Europe as to how much money you lost in the first quarter of the year, but actually some places in Europe and the better farms were making money in the first quarter, and it's more profitable as we go through 2, 3, and 4. But it's still challenging. There is still a requirement to invest. Just to give you a little bit of detail by country, the black line is Germany, and these are the two I want to talk about really in the time available. The decline in German production you can see going back all the way back to 2015, that steady decline in production. They knew ASF was coming. Part of that was environmental regulation. Part of it was the reality that they were going to get ASF eventually across the border, and it works against investing in the industry. And the reality today is they have ASF. They are constrained in where they can expand. They're constrained environmentally. And as that spreads, there are less areas of the country where they're going to be able to export from, even within Europe. So they have regionalization with Europe. They can supply the rest of Europe. And that's really important. Spain, rapid growth in Spain, really driven by the opportunity to export outside of Europe. But they are now constrained in the zones where they've built those big pig complexes. They've got environmental pressure that stops them expanding further. And so you see, actually, they had a small decline. It's really hard to pick up in there. But in terms of total production, last year they were down about 2%. We think they'll stabilize. There are new slaughter plants. They could expand into those. Denmark down sharply. The Netherlands was okay in 21 into 22, but this year has come down sharply, and the environmental pressure will drive that down again. France is staggeringly resilient. Lots of small farmers arranged around cooperatives who get heard, make themselves really clear, but even there we're seeing a slow decline, about 2% per year. Just to put you in the picture on ASF, if you don't look at these, it's slightly out of date, this, because we've seen a bit more in Italy. But this is Germany here, and these are the ASF cases. So they're mainly in the eastern end of the country on the Polish border. But the expectation is we get outbreaks occasionally that just jump right across the country. That's the thing the Europeans are most terrified about, is you get a jump case where it doesn't just go, because these blue dots are wild boar and they migrate across. But if we get somebody that transports in a piece of infected meat, or they transport a wild boar, or they just happen to transfer a pair of boots that have got it on into a wild boar area, then we can find they jump. And we've seen it jump before into Belgium. The Belgians actually got it out of the country, but they built fences and rings of fences around where they had it in the Ardennes forest. They were really lucky. They're pretty sure that they found the first wild boar in the country with ASF, and even when they got that one, it had already spread on to others. But the fact they got in early meant they got it out. This case in Italy is interesting. These are wild boar. They're not so far from the French border. And if it gets into this part of France, then it can get on down into Spain eventually. So we are really worried about the potential impact of this on export. There we go. Last point, just to make a couple of things on sustainability. There are 17 sustainability criteria. You can go and look them up on the UN website. There are only really 3 that focus in on animal welfare and the environment. They're very serious ones, but there are 17 other things like access to affordable food and the development of rural economies and making sure that people still have jobs tomorrow. But the ones that we spend all of our time talking about are animal welfare and sustainability. Animal welfare is a hugely emotive topic. Within Europe, we've seen bans on tail docking, sow stall and tether bans. Castration bans are partial, but they're increasing. Slatted floor bans or restrictions. Those things are part of life in Europe, and they continue to add cost and complexity to everyone in the business. And it's a ratchet process. Once we get one thing complied with, they just bring another one in. We have to manage the conversation, but we're also in the point of accepting that it is just going to happen. So deal with it, move on to the next one, and deal with that, make sure the business can keep moving forward. Sustainability has been lower key, but significant changes. We're seeing not just the governments driving this, so the European Deforestation and Forest Degradation Free Supply Chain, it's catchy, that one, is really serious. What that means is don't go and buy soy from Brazil, or it's certainly from the north of Brazil, because we can't guarantee they didn't cut down trees in the Amazon to grow it. That's going to add another level of cost. Manure disposal plans at a government level are a very real thing. EU ban on prophylactic antibiotic use, they'd already restricted a whole heap of other ways of using them. Regulations on packaging are coming, and so on and so on. But we have to be part of the conversation. So there are lessons to be learned. You can look across and borrow technology from Europe, because we're already putting these things through the system today. So there's loads to talk about in Europe, loads to talk about globally. I want to give Rich time to talk about China. So Rich Hertzfeld has worked with me for 12 years, is based in New Jersey, as I said, but lived in Beijing, Beijing, Shanghai, Vietnam for 25 years. So he'll give you a really interesting 20 minutes on what to expect coming out of China. Rich.
Okay, I'm going to talk about China in 2 ways. First, I'm going to talk about the basic things that are driving politics and therefore food security in China. And then I'll talk about the pork sector and how that's all affecting the pork sector. These are things that are really, is this right?
It's got jet lag.
I used to have a lot of jet lag. So the political situation in China, we have Xi Jinping. He's in full command. Politics is in full command. He's put all of his people in every high post. And what he's doing is doubling down on national security and what they call self-sufficiency. And those are 2 quotes there from his latest speech to the National Security Commission in China, where he says we have to prepare for high winds and perilous stormy seas, and we need to do worst case scenario thinking. And that's what we need to prepare for. So that's pretty serious. And I've been listening to him for 10 years. And what I'm going to be telling you is now they are really working on these self-sufficiency items. National security covers everything, basically. The environment, agriculture. They've thrown out a lot of environmental rules because they want to be able to produce things. Food security is a constant theme here. It's been a constant theme for 10 years. For a long time, our thinking was China cannot feed, for instance, they can't feed all their pigs without imported soybeans. Now they are trying to get rid of soybean imports, and they're serious about it. In terms of COVID, there's been a sluggish recovery from COVID. The overall economy recovery has been slow. There are a lot of indicators we look at. Unemployment is very high among young people in China. Recent college graduates, more than 30% don't have a job. That's a serious sign. There's also things like very low coal prices. It's a sign of weak electric power demand. Therefore, industrial production is probably pretty low. Exports are sluggish, and that's partly due to weak demand from around the world. The People's Bank of China has been letting the RMB weaken. And then there have been these raids on foreign business offices, and it's not just on consulting companies. They were raiding consulting companies because they thought the consulting companies were finding out too much about what was going on in China. But they've also been occasionally raiding other foreign companies, and this makes investors and people who are trying to do business in China very worried. However, if you are useful to China, like Elon Musk is, you will get the red carpet. He was there, I guess, last week. He got meetings with 3 ministers. The Chinese are the world's best at flattering people if they think they're useful, and that's the treatment he got. However, don't be fooled. If you're not Elon Musk, you're going to have problems. This is something that I have literally been hearing about for the last 15 years from Chinese. They want to import less corn and fewer soybeans. And I've had Chinese tell me, well, we let the soybean industry, we let it get out of control, so now it's under control of foreigners. If you look at these charts, there are different scales. So you're talking about 25, 30 million in corn. But the soybean imports are actually much larger. They're over 90 million tons. Red is the US. Consistently, I try to use green for Brazil and red for the US. In corn imports, US corn imports are down the first quarter of this year, and Ukraine is up. You see the Ukraine, which is blue in the left-hand side, was way down last year because of the war, but they are now recovering and getting more corn out. Meanwhile, soybean imports have actually gone up. They're importing more from the US, but they don't like it. One of the reasons that you can tell that they're serious about this is they've established something called a Nongguan, which is a rural enforcement force. It unites a lot of bureaucracies, but these guys go out, and what they're doing is something that I have not seen in China for 50 years, which is since the Mao era. They're strongly focused on establishing food security. When that means that China must be able to survive without food imports. Grain is considered vital. There's a famous saying of Mao, which is something like, "Take grain as the chief force." But what's happening is these officials in Nongguan are forcing farmers to dig up cash crops and plant grains. So I didn't think that they could increase soybean production significantly, but they're forcing it. And for one thing, it's very bad for the Chinese farmers, because the way that, there's a saying that China lifted hundreds of millions of people out of absolute poverty. One of the ways it happened is that farmers stopped growing grain and they started growing cash crops for the cities. And these guys and you see reports of this from all over China, that they're ripping up crops that would normally be cash crops. And environmental initiatives have basically been reversed. They had all these environmental initiatives to limit pig farm expansion. One example is the city of Chengdu, which is a very big city, had a green belt for environment built around it. It's now been returned to farmland. Another way you see it is the way they're building as many coal-fired power units as they can. They've completely, forget about limits on coal, forget about carbon limits. They need power. They have coal. Mongolia has a lot of coal. Russia has a lot of coal. So they are going to, they're building a lot of these plants. Moving to the pork sector, just a second here. So this is the basic pork balance table. You can see the huge dip for African swine fever. And the huge rise in imports when that happened. The truth is, though, that per capita pork consumption peaked in 2014 and has been going down. If you can just draw the line out, and it keeps going down. It's still more than 50% of meat consumption. 30 years ago, it was 90% of meat consumption. So what's happened is that people have been switching to other things as they get the opportunity to switch. They're not just eating more. We do think that historical production may have been exaggerated, but nevertheless, the trend is that we see is pretty clear. ASF is still hitting production, but the industry structure has changed, so it's doing a lot less damage to production than it did before. Imports year to date, pork imports are running 14% below 2022, but we think they're going to pick up the pace because we're expecting there to be shortages in the Chinese pork market starting July and August. Pork sector prices, you can see that's, I think Rupert already showed this. This is the huge effect of ASF. One of the things that's interesting here is the piglet price. In early 2018, 2019, when it was most serious, piglets were below retail. And now you can see that they're up. So this suggests that growers are losing pigs, but they're also restocking this time. The retail meat prices, this is just to give you a comparison of what the prices, the retail prices have been. You have the huge rise in the pork price, and beef and sheep meat, that's mutton and lamb, is the green. Those have stayed up pretty much. So there's kind of there's high-end demand for beef and sheep meat still. The pork price is down because there's been basically overproduction right now, down to where the poultry price is. That's actually bad for poultry because people do prefer pork if the price is the same. This is looking at the weekly live prices. So this is since ASF, since August 2018. So these are some selected provinces that basically represent different areas of the country. If you look all the way on the left, what you see is when African swine fever was first hitting, you can see the price separation between all these provinces. It's hitting in different ways. People didn't know what was going on. There were all kinds of logistical problems all of a sudden. You don't see that after the first after the second big peak. And pretty much it's been moving together on a national basis. There's some outliers. You see the little blue line and green line. Those are highly urban areas. Early this year, all the way on the right here, that's Shanghai. Shanghai is completely urban, doesn't have much production of its own. The price was very high. Now talking about the structure, so I'm going to look at ASF today. Now these are, I'll talk about these a little more. These are two of these huge complexes that they've built, Lofang, multi-story buildings. So right now we see a lot of reports of ASF variants circulating. It's still around, but there are two big differences. The industry has restructured. So it's much more resilient. So we're not expecting a huge drop in production this time. And the other one is that the virus itself has mutated. There are all kinds of variants around, and it's lost some of its sting. This is, just to give you a close-up of these giant places. Neixiang, this is Muyuan on the left, is the Neixiang complex. 84,000 sows, produces 2 million pigs. According to Muyuan, it actually is doing that. On the right are the giant pig hotels. This is actually pretty near Wuhan. 600,000 pigs per building is the production idea. The way it works is that, they have the sows at one end of the building, and then progressively on each floor, the piglets grow, and then they become feeders, and then they go out the other end, and they have a slaughter facility somewhere around there too. So you're talking about 1,200,000 pigs from this building, if they can make it work. I mean, I'm trying to. A friend of mine in China has been working to try to visit it, because I would like to talk to somebody who actually has been there and can tell me it's working. Because it just seems it's been built by a cement company, which ran out of highway contracts, and they needed something to do with their cement. So their cement plant is right back over here. So they managed to get a huge number of subsidies to use a lot of their concrete. So we'll see what happens with that. The other one is definitely working. They moved a lot of their best, this is the biggest pork company in the world, and they moved a lot of their best people into this complex to make sure it was going to work. This is how the industry has restructured. So before 2018, the top companies, the 10, 11 companies here, probably produced about 3% of China's pork. Now it's 23%. And they're aiming for 50% by 2027 in just 10 companies. The biggest one is Muyuan. 61 million pigs produced last year. That's close to 10% of China's complete production. And the Muyuan, the head of Muyuan is absolutely brilliant at financing. And that's why he has been able to grow and survive. These companies are really in battle for market share, so they're willing to lose money. Muyuan lost something like 10 billion renminbi last year on its pork operations, and they're proud of that because they lost less per pig than the other companies. So the basic question right now is how much money can you afford to lose before the shakeout? And Zhengbang has fallen out of the loop. They were number 2, but they've gone bankrupt. They didn't have the financial resources to keep up the fight. Suddenly, they couldn't buy feed. They didn't have enough cash to buy feed for a lot of their pigs. They had to sell off a lot of their operations, and then finally went into bankruptcy course. And they're probably not going to be number 4 this year. ASF, we have a weaker virus. It's no longer wiping out whole herds at a time. Some pigs are beginning to show resistance. There are a lot of variants circulating, and one of the reasons is that if you go to China, every province has a big agricultural university. And they all have ambitious scientists, all of whom said, oh, we can develop a vaccine for this, even though it's not permitted. But they can sell it to the local people in the province. And when you're talking about a province, you're talking about an area of 100 million people. So it's very hard for the center to control everything that's going on in all of these provinces, villages, and universities. So that's why you've gotten all these different variants. However, overall, the bottom line is I think it's going to be a marginal effect on production. Now, marginal in China, so 2% is 1 million tons. So it could be a positive for imports, but not anywhere near what happened before. This is monthly China imports. You can see a few things in it. For instance, the purple line on the left is, I'm not sure I can pick it out here, but that's Germany. When they got ASF, suddenly they couldn't export anymore. You also see red, again, is the US, and we have green for Brazil. Last year, the Europeans were the big shippers. This year, Brazil's prices are much lower, so they're getting a lot more of the business. The US's price is lower than the EU, but as I said, price is not the only factor for Chinese importers. And the importers who tend to buy US pork are the big state-owned companies because they have political protection. So when you saw last year some big buying by the Chinese Pork Reserve, that was through state-owned companies. Then just some trends. This is just summing up. That's a paper cut from Wuhan. Chinese pork sector has restructured. There's lower pork consumption per capita, and as we know, the Chinese population is actually falling. So it's being hit 2 ways. There's a drive to reduce agricultural imports, and in the last 2 years or so, for the first time, I think it's really having a serious effect. They've been talking about it for 10 years. For 2023 pork imports in China, we're forecasting about 2.1 million tons for 2023. Current pace is about 1.6 million tons. But we expect, as I said, we expect it to pick up because we do expect that there'll be some shortage in China in the second half of the year. Compared to last year. What? Compared to last year, yeah.
I mean, how does
2.1, it's a little up from last year, like 300,000 tons up.
There's clearly a lot going on. It's a challenging market, not just here, but globally. This is a tough time, and it's been ongoing, as I said right at the beginning, for the last 4 years, we go through event after event that the industry has to factor in and ultimately pay for. There's been some money made along the way. Today, really the inflationary impact on global consumption, I think, is, for me, the thing that sets the market moving. It's causing some of the problem, that affordability of meat around the world, not just here in the US, but also here in the US, where we're looking at people adjusting back to where they were before COVID. Consumption patterns have been really shifted by things like the payments made to workers through COVID, the fact that people didn't go out and spend money during COVID, the fact that they then went and spent that money that they'd built up. And now in the US and globally, people are trying to adjust back to this inflationary environment and how much money they have in their pocket. And there isn't the demand that we were setting ourselves up for at a global level. And that causes this supply distribution problem that we see around the world. So that's the big overarching story behind everything. US and EU markets are out of sync. They do get out of sync from time to time, but not normally as far apart as we see them today. And so that's interesting. And really, that was the timing of coming out of COVID, impacts of the Ukraine war, a whole range of things went on there. And we ended up with this inevitable reduction in European production as that profitability kicked through the sow herd last year. And that's making it profitable today. But you've got to question what that really means for the industry structure going forward. And we've seen a number of plants already this year closed permanently in Europe. Environmental pressures are going to increase in both markets, not at exactly the same rate, but the same kind of processes happening in both, because we've got the same anti-meat lobbies, the same animal welfare lobbies. We've got some of the same food service and banking groups. The retailers are looking at the same messaging and trying to think what it means for them. And some of the pressure we see on this is not necessarily legislation driven, but we see some of those groups coming in and saying, okay, but we want our product produced like this because we've got shareholders who are turning up the wick on us to be sustainable. And I was speaking to one of the global lenders the other day who were telling me that we do some work for them looking at business plans in places like Africa. And normally it's, does this business work? Will this meat business work from livestock all the way through? And now they're going, that's fine, but is it sustainable? Because if it's not, we won't lend to them either. I mean, this is Africa. We're worrying about whether or not we can get the product there and whether we can keep the people alive. And we've got to put in sustainability as part of that business plan now as well. So this is serious and it's global and it's got to be part of the future. So we've got to work with it. China demand is weak. It is recovering, but we're not talking about what we saw in 2020. Rich has been pretty clear on that. We are expecting a bit of a lift in imports into Q3. Second half of the year should be better than the first half of the year. It's still challenging. There are lots of things in China that are not positive. Economics, the way that people are being employed, there are challenges in China that we just haven't seen before. The Chinese haven't seen. Maybe in a generation, Rich?
Yeah. Not the challenges, but the way they're handling it is 30, 40 years old.
So there's that to factor in. The sustainability thing, as I've said, is building in Europe. It's spreading to the global market. The advantage for you being this side of the ditch is that you can look at it and go, can we learn from that? How do we factor that in? But you can't ignore them. Investors are linking this need for sustainability, the ability to lend money,